let's just start big picture. You came out of your retirement in 2019 to turn Subway around. What made this opportunity worth that?
Yeah, so I did Burger King. I ran Burger King for 7 or 8 years, which was a turnaround basically, and I wasn't looking for a job. I hadn't worked in I was working, but not in a real job. I always thought Subway was public, and I always said I never wanted to run another public company again, having done that twice. And I had no idea Subway was private, so when I found out that it was private, it had been owned by 2 families for 58 years. It had no debt. It had never borrowed $1 of debt in 58 years. It had the second largest ad fund behind McDonald's. In the US, we have about $550 million ad fund. Globally, it's about $800 million. Largest restaurant chain in the world by units. So it had a lot of great assets. So I thought, you'd have to be an idiot not to be able to do something good here. So it was
an easy yes.
No, I wouldn't say that, but it was a fun ask. So
it was a fun ask. I mean, the past 4 years, so much has happened, but of course, most recently, you have to tell us a little bit more, if you can, about that $9.6 billion deal. Why Rour Capital? Why go with them?
Yeah, well, Rour Capital, obviously Neil Aronson, who founded Roark, loves franchising. I think they own, I can't remember how many restaurant brands, but they own Massage Envy, and they own Orange Theory, and they own Driven Brands, and they're just kind of experts at franchising. So obviously it was very competitive. We had 24 private equity firms that started at the beginning of the process as we went through it. And at the end of the day, Roark, I think in the families, I think hopefully both sides are happy with the price, but clearly our franchisees are happy that we ended up with a buyer who not only understands restaurants, but clearly understands franchising. So I think it's a win-win-win.
Do you think that Subway will change at all under Rour Capital, or still same momentum that you've seen recently?
No, I mean, they've been very clear that they bought it as a solo entity. They're not going to combine it with any other restaurant chains. They're, going to keep the same management team, same strategy, same plan, and I'm guessing, I don't know, but I'm guessing they will take it public one day as a separate entity as well, so.
There's lots to stay tuned for, that's for sure. Let's talk about the business here in the U.S. Last year, Subway closed roughly 500 stores here in the U.S. How are you thinking about the real estate portfolio here at home?
Yeah, and that was a good year. I mean, when we got there, Subway had 7 straight down years of sales that they were closing 1,500, 1,000 a year. So I think the fact this year will be below that. So the trend in the U.S. has slowed down dramatically. Globally, this will be the first year we've grown since 2016. We'll open up more than enough internationally to make up for that. But most big QSR chains close 1% to 2% of their units a year. So if we have 20,000 restaurants in the US, that puts us somewhere in the 200 to 400 restaurants, which is kind of where we are now. Mm-hmm. So, my answer is we should close 300 to 400 like everybody else does, but we should open 200 to 300. So basically tread water in the US at worst. I actually think we can grow and open up some of what we closed in the past, but best case, tread water, and internationally, it's a completely different story.
Yeah, let's talk about international for a second. You guys recently announced, or rather signed 15 franchise agreements. That's totaling 9,000 future locations. Where do you see the biggest opportunity for future store growth? What sort of consumer is looking for a Subway in their market?
Yeah, well, I think the beauty, if you think about, there's really only 6 global brands out there. There's McDonald's, Burger King, Domino's, KFC, Starbucks, and ourselves that truly are kind of everywhere and have scale. So we have 17,000 restaurants outside the US. Only McDonald's and KFC are bigger, so clearly we're out there. But if you think about, of those 6 global brands I mentioned, we're the only one that's really healthier. It's easy to say now that I'm not at Burger King. Don't have to be healthy, just healthier. And if you read the Wall Street Journal and you look around, the Middle East, China writes about, they have obesity problems now, they have juvenile diabetes, they basically, a lot of these countries have the same health issues we have. And so I think we really play in a sweet spot globally in terms of sort of the food we have in our menu. So I think we're positioned perfectly. And then a Subway's obviously much less expensive to build. It takes a lot less labor than a McDonald's or a Burger King. So when you sort of look at the unit economics, it's very appealing to a lot of large restaurant developers internationally. Yeah. So I think we're in a great spot.
Yeah, and also too, on this weight loss, on this diet trends that you're seeing, I have to ask, what is Subway thinking about the potential impact of weight loss drugs? Are you guys planning for that? Do you feel like your menu is fitting the needs of a future consumer who perhaps is taking more of these sort of weight loss drugs?
Well, unless people decide if they take the drug, they can go have, 2 Big Macs and a Whopper and whatever, then we might be in a little trouble. But no, I think given the fact, again, that we are sort of the healthier, we have wraps and we have bowls, and tuna's our second largest selling product. So I think it actually plays into sort of the trends of where the world's going. So we don't spend a lot of time worrying about what's that going to do to us.
And consumer sentiment is also top of mind right now. So many consumers are searching for value. How are you working with franchisees to make sure that you have the right price point to meet the consumer where they're at? There's so many headwinds up against consumers right now.
Yeah, and if you think about if you come from Wendy's or McDonald's or Burger King, everybody has the dollar menu, or now it's $1.29 or whatever, which we don't have in the sandwich space. So luckily, one of our brand attributes that we've been known for 50 plus years is value for the money. That's probably one of the strongest sort of value propositions Subway has vis-a-vis the sandwich competition. We're definitely cheaper than our 3 or 4 other sandwich competitors. But when you have to compete, given our scale, you have to compete with the burger chains and the pizza chains. So I think it's really incumbent upon you to engineer products that are maybe not the foot long or 6-inch, maybe even slightly different sides, things that maybe not, you're never going to get down to the $1.50, but you can play in the $4 and $5 range, which I think keeps you really relevant. And so it's very important to have that barbell strategy, if you will, so you can really get the consumer wherever they want to shop.
Yeah, and speaking of that consumer, who exactly would you say is coming more to Subway these days? Would you say that maybe people are trading down into the category that Subway is? And do you see others maybe spending a little less than they used to in terms of income levels of your consumers?
Yeah, I mean, having been in the QSR industry for a long time and living through 07, 08, living through some other times, yeah, definitely in the early times of an economy softening for the first 4 to 8 quarters, you get the trade down effect where if maybe you're in fast casual or casual dining, people that are more stretched for their dollar, so to speak, do trade down. And so I think we all benefit from that to a certain extent. Now, if it's prolonged, you obviously can't continue to lap that forever. So it eventually, shows up in your same store sales numbers. Mm-hmm. But it's definitely a little bit of a tailwind initially.
And in terms of digital offerings, you guys are working to implement more digital offerings on the app. You're really looking to get customers engaged. How are you working with franchisees in order to do those digital offerings? What's their reception so far? I believe that there's a digital offering set to be in effect by the end of the year.
Yeah, so Subway had massively underinvested in technology. That probably explains part of their 6 or 7 year slide. When we got there, digital sales at Subway were 3.5%, which is abysmal. The pizza chains, which will never be, are more like 75 or 80%. But if you looked at a McDonald's or a KFC, a lot of those guys are more in the 25 to 35% range. So we're at 10%, pathetic, right? So you look up 4 years later, we're at 17. So we've quintupled it, but I would say there's still a long way to go from 17 to 25 to 35. So we continue to invest in that digital platform. Digital happens to be our most profitable channel in terms of the highest check and the most profitable check for franchisees. Helps them on labor. Obviously, it's much easier on an app. Somebody generally orders, I'll take the number 4, the number whatever, instead of having the sandwich artist have to ask you 11 questions. So I think from a franchisee standpoint, they like the profitability. They like the fact that it's less labor. And kids today, let's be honest, the customer doesn't want to talk to them. And the sandwich artist, people don't like to talk. People like to look. So
yeah,
we need to.
So the reception's been good to digital offerings so far.
Yes.
And when you think about the person behind the counter, that labor, when you think about Subway's market, one of your biggest markets here in the U.S. is California, and the FAST Act is set to go into effect April 1st. That will bring minimum wages up to $20 an hour there. How is Subway thinking about that? Or are you guys going to raise prices there to offset that higher wage?
Well, again, we're 100% franchise, so we don't control pricing. We recommend pricing to our franchisees, but it's up to them whether they want to accept, what we think or not. But yes, I would say it's inevitable that franchisees in California, like you've heard it from McDonald's, you've heard it from Starbucks, prices are definitely going to rise more in California than they have anywhere else, given the wage pressure, that they're obviously going to be facing.
And you're working closely with franchisees to offset that?
Very. But that's, again, another reason why you want to keep pushing digital. You want to keep pushing as many things as you can to help them take labor out. I assume we're going to talk about inflation at one point in food costs, but where else in the P&L can you help them? Because you clearly can't help them from a labor at least the cost of labor. So
yeah, let's talk about inflation
really
quickly.
We don't have a robotic dog to make sandwiches.
No robotic dogs to make sandwiches. No plans to add
No, we're very
robotic?
low tech at the moment. So
okay, any plans to get high tech?
we need to fix the brand first, then we'll go there. So.
Okay, all right, good answer, good answer. So your menu does range, everything from chicken, bacon, ranch melt to bacon and eggs. These are some of the hardest hit ingredients that have seen the highest inflation rates in the past year. How are you working to combat that? Where are we at with the cost of goods now?
Yeah, so luckily in the US, I'd say from a food standpoint, we think food costs are going to come down sort of anywhere from 2 to 4%, maybe on the aggressive side 5, let's go with 2 to 4. So I think we've definitely crested that. And so when we look at our basket of items that we use, our SKUs, so to speak, I think our franchisees will actually have some tailwind in terms of those costs coming down this year. The other thing we did, which I have no idea why Subway ever did this, we were the only sandwich chain that actually cut all of our proteins upstream. We didn't have slicers. We had them decades ago. Why they took them out, I have no idea. And so there are very few suppliers that can pre-slice that quantity of meat. So we pay way more than what everybody else was paying for meat. So now by having slicers in every single restaurant, now we can open ourselves up to infinitely more suppliers. So not just the fact that inflation's passed, as we renegotiate all those protein contracts, we will take big chunks of cost out of the system, which will obviously benefit franchisees as well.
Wonderful. And I want to bring it out big picture really quick. You do plan to open 4,000 locations in China over the next 20 years. What is the status of that expansion plan right now?
Yeah, they're building away. I mean, again, don't know, Subway in the past didn't want people that were in other concepts. So the people that tried to grow Subway in a country would literally go one at a time, which is obviously not the way to grow internationally. And so when we got there, we said, no, we want the people that have 500 Domino's in the country, 500 Burger Kings, 1,000 Starbucks. They know what they're doing. They know how to develop. They know that you're going to lose money on the first 200 or 300 until you get scale and presence. So our deal in China are people, that are multi-units. We just signed a 2,000 unit deal in India with the people that have Burger King and Domino's in India. And you could look in Turkey, you could look in Malaysia, Indonesia. Almost all these 10,000 restaurants you're talking about that we've signed up so far are with people that have experience in other brands. So.
And when you think about that dip in the consumer and adoption of something like a Subway, does that worry you at all? We're seeing others trying to get into this space, and it's been a slow go.
Yeah, but again, we have over 17,000 restaurants out there, so it's not like we're not out there. We're in 100 countries. We know sandwiches work globally. And we do have some large competitors, like in the UK, we have something called Greg's. But you're right, so far the Jersey Mike's, the Firehouses, the Jimmy John's are much more domestically focused. So I always tell our team we need to turn our backlog of 10,000, we need to turn that into a backlog of 20,000. I mean, we haven't touched Spain, we haven't touched Italy, we haven't done Japan, we haven't done Vietnam, we haven't done the Baltics. So we're out negotiating deals in all those markets, and we just need to make sure that we get them all done before our domestic competitors start to focus internationally.
Is global the future for Subway?
Absolutely, not just Subway. I mean, if you look at any McDonald's, Burger King, any QSR chain, the vast majority of their growth comes internationally.
And you've had such an extensive career. You were at PepsiCo, you mentioned you were at Burger King. If you had to highlight what makes this opportunity unique or different, what would you say?
Like I said, there were two things really. One, just the scale. It's great to work with a brand that has 99% brand awareness almost everywhere in the world. But working for two families that don't owe a bank a single dollar, you're not having the gun of a public company, and having worked for a ton of private equity companies in my life, they're almost as obnoxious as I tease them that because they're my friends, as being in a public company. So working for two families that are just very patient and like, John, we don't owe anybody anything, just take your time, fix it. It's been a pleasure to work for them, and kind of whatever pressure you have, you put it on yourself. You don't really have any external pressure, which makes it a lot more fun.
Do you foresee that being the same situation with Rour Capital?
No.
A little bit more pressure. Just a little bit more pressure.
No. Well, I mean, we'll be fine, but it's just different, so.
Yeah. And in terms of consumer trends right now, are there any ones that you're following in particular, maybe a certain eating habit or a certain go-to that you're seeing at your Subway locations?
Yeah, I think people, like snacking, which we were not really great at. You'll see us in January in the first quarter roll out a lot of snackable items that get people in there sort of between lunch and dinner. I think as people get stretched for price, people maybe skip meals, so they snack more. It really depends on sort of where you are on the economic spectrum. Again, when we went through our 6 or 7 year slide, we used to have a really good late night business, which we don't have.
Will you bring it back?
With that, we definitely, we're going to definitely go work on that. Catering, why Subway was never, like Panera, it's like 20-25% of their business.
Right.
If you think about a Whopper, a Big Mac, and fries being delivered to your office or your house, it's not the most portable product. Subway's ideal for catering. Never had any catering package, never advertised catering. So I think over the next 5 or 6 years, won't happen overnight, but we can build a sizable catering business. So I think we have lots of opportunities that the brand just hasn't focused on, but our product is perfect for it.
So John, you're not retiring again anytime soon?
No, I'm still having fun.
John Chidsey, Subway CEO, thank you so much for joining us. I so appreciate it. Thank you.
Thank you very much.
Thank you.